I got a phone call from my buddy Jason 3 weeks ago. He's sitting in his car outside the bank and he's whispering, literally whispering. He goes, "Dude, they just approved me for $700,000. And I can hear it in his voice. He's terrified and excited at the same time, like he just got handed a loaded gun and a lottery ticket in the same envelope. I asked him what he makes. He said $9,000 a month before taxes. I didn't say anything for like 10 seconds, just let that sit there. And then he goes, I know, but they said I qualify, so it must be fine, right? That's the lie. That one sentence is how people ruin their entire lives without anyone ever telling them it's a trap. The bank didn't approve Jason for $700,000 because he can afford $700,000. They approved him because statistically he probably won't default. Probably. You know what that means? It means they ran the math on thousands of people just like him, and enough of them make the payments that the bank profits. But Jason isn't a statistic. He's one guy with one paycheck and one life to live. Let me break down the actual scam here. Jason makes $9,000 a month gross. Sounds solid. But after taxes, retirement, health insurance, all the stuff that comes out before he ever sees the money, he's taking home maybe $6,700. That's reality. The bank's using $9,000. That's fantasy. They told him his debt to income ratio would be 43%. 43% of $9,000 is $3,870 a month. But 43% of what he actually takes home? That's not 43% anymore. That's 58%. More than half his real money gone before he buys groceries. And nobody at that bank told him that because they don't have to. Here's where it gets worse. Let's say Jason buys a house for $650,000, puts 10% down. His mortgage is around $4,200 a month at 7% interest. But that's not the only cost. Property tax $400 a month, insurance $300, homeowner fees $200, maintenance $300 minimum, utilities $250. That's $5,650 total. He's taking home $6,700. He has $1,050 left for his car payment, gas, food, phone bill, and somehow saving for the future. $1,050 for everything else in life. That's not homeownership. That's financial suffocation with good credit. The person who approved that loan made about $6,000 in commission. The bigger the loan, the bigger their check. I'm not saying they're evil. I'm saying the system is built backwards. Their win is your risk. I started pulling data last month. The average hidden costs of owning a home in 2025, not the mortgage, just the other stuff, is over $21,000 a year. That's almost $1,800 a month that most first-time buyers never see coming. There was this couple I saw online, young late 20s, bought a house outside Austin for $800,000. Gorgeous place. Marble countertops, huge ceilings, pool in the back. 6 months later, she posted a video with no music, no editing, just her sitting in the empty living room talking about how they can't afford furniture, how they're fighting every week, how he picked up a second job delivering food at night. She said something I'll never forget. We have the Instagram house, but we lost the Instagram life. They're stuck. Can't sell, can't refinance, can't breathe. That's the real cost. It's your relationship, your sleep, your peace. Here's what nobody wants to admit. The system isn't designed to protect you. It's designed to extract maximum profit while keeping you barely functional, and it's completely legal. But you don't have to play along. When I was looking at houses 2 years ago, I got pre-approved for $540,000. I bought at $320,000. People thought I was insane. My agent tried to show me bigger places. She's like, "You're leaving money on the table." And I was like, "No, I'm leaving stress on the table." I wanted a house where if I lost my job, I could survive on unemployment for 6 months. I wanted a house where I could take a vacation without doing mental math. I wanted a house that didn't own me. My house has gone up in value the same percentage as those bigger houses. But I'm not house poor. I'm not stuck. I have options. That's the difference. The metric I use is simple. If your total monthly housing cost is more than 30% of your actual take-home pay, not gross, but take-home, you're in the danger zone. Not today, maybe, but eventually. Because life happens. Cars break, people get sick, jobs disappear. And if you're maxed out when things are good, you have zero margin when things go bad. There's this rule called the 28-36 rule. Housing costs shouldn't be more than 28% of your gross income. Total debt shouldn't be more than 36%. That's the safe zone. But lenders will approve you up to 50% now if your credit looks good. 50%? half your income. They'll say it's fine because rates might drop, or your salary will go up, or home values always increase. But the only thing that's guaranteed is that payment hitting every single month. Jason called me last week. He didn't buy the $700,000 house. He bought one for $480,000. He said it was the hardest thing he's ever done, walking away from what he was approved for. It felt like failure, like he wasn't ambitious enough. I told him, you just made the most gangster financial move of your life, and nobody's going to give you credit for it. But in 5 years, when your friends are drowning and you're sleeping at night, you'll know. This isn't about being cheap. It's about knowing the game is rigged and playing it on your terms. The bank's job is to lend you as much as possible. Your job is to borrow as little as you need. Those aren't the same thing, and the gap between them, that's where your life lives. The biggest house you can get approved for will become the smallest cage you've ever lived in. But the house you can actually afford, that's the one that sets you free. So when that loan officer slides that pre-approval letter across the desk and you see that big number, remember something. That's not what you can afford. That's what they're willing to risk. And the difference between those two things, that's everything.